By now, you may be aware that July is historically one of the best months of the year for investors and traders, but will it be again in 2024? Today, we uncover one of the stats that's actually 90% of something that tends to happen in July. Also, are we in an AI stock bubble? It's probably clear we are, but just because people mention the word bubble, you have to think there's usually more to come. And today, we talk about that, and of course, we break down the stats of what's going to happen next. More importantly, we know that we're at a pivotal point coming into core PCE. The Qs have seen some large transactions go through on them. In fact, it's the biggest we've seen since 2017, and it needs to be discussed as negative delta starts to take hold on the S&P 500 and Nasdaq. And are there opportunities out there? Well, the answer is quite simply yes. We've been talking about oil being in a potential short squeeze, and it looks set to break out. And of course, Tesla continues to play with that 200 level. If it gets through, things could get wild. Join us today as we discuss stocks, commodities, and cryptos around the world. Well, what's up, everybody, and welcome back to The Daily Show. My name's Tom. Today, we're discussing everything from the macro to the data and what you need to be looking at as investors and traders right now. Let's begin with the rotation that we know is happening underneath the hood. Huge trades in semiconductors are leading into sells. And of course, we've got rotation into breakouts in Amazon, Google, Meta, Tesla, and many other larger tech stocks. It does look like there are a few other opportunities as well on the horizon, which we'll be discussing along with the dark pool activity. But if it's your first time here, remember to subscribe and smash that bell icon if you enjoy understanding more about what Wall Street's up to and where the flows are going. So let's discuss the prime book here. Goldman Sachs data basically is coming out, courtesy of Tracy here over on X, and basically showing that we have got one of the largest sells in tech for a very long time. Now, what is this? Is this something to be concerned about? Well, in some ways, yes, in some ways, no. Basically, what's happened is semiconductors have led a narrowing breadth increase in the market. And just recently, we've seen semis being sold. Now, why could that be? Well, it ends up being the end of the quarter. So it's probably a bit of profit taking around this period of time. Plus, it's due for semiconductors to do what they've done for quite some time. Rotate and basically start to consolidate as the market moves into the other sectors and hopefully increases breadth across the board. Now, if that doesn't happen, of course, it's more concerning, but right now it does seem to be what's going on. And it brings us to a discussion of, have we just entered into the end of the AI bubble? Are we already there? Is everything about to end? Well, there are some big things I think we all need to understand about bubbles. First up, bubbles generally are bigger with the new ones than they were in the past. And each one usually is a larger market cap, it's more explosive, it's everything else. And why is this important? Well, let's read a quote here that we've shared a few times. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. John Templeton. Now, this is a great quote because just like everybody always says, when everyone's mentioning the word bubble, usually it's not going to end the market. When everyone runs into euphoria and doesn't mention that anymore, that's when you need to be terrified. And as you'll see in a few charts later on, that could be where we're heading in the future. And it actually comes back to this great data set shared here from Wayne Whaley over on X. And he did this study about a week ago. And what it does is it goes through the most correlated markets with the last 4 quarters over the last 40 years and now. Now, I noticed something about this straight away. 86, 87, 97, 98, these kind of periods, and even 94, 95. Most of these periods, if you notice where they are, they're either in a very concentrated market or they're at the end of a particular cycle that ended up having a pretty explosive time in markets around the world. Now, that I think is interesting in itself, but I also found it interesting that over the next 63 days, a few of these most correlated markets do tend to have little pullbacks. Now, we've been talking about election years, and election years usually start to spike with volatility in July, into, of course, August, into September, into October, into November, and they crescendo just before the election. But maybe this year is going to be different. Maybe we'll see a bit of volatility coming in before that time. And of course, we'll need to be aware of that in the markets. Although, as you'll see with some stats, it doesn't look like it's still going to be the end of the market. It's probably just going to be a correction, hopefully a healthy one if we can get it. So let's talk about bulls and bears in the survey reports. We know that it was 22.5%, historically low, And straight away, a little bit of sell-off brings back the bears big time. And we've been talking about that 54.40, 54.50 level to be really where the bears are going to take control of the market, the negative gamma area. Well, that has not been broken yet, and it will probably take core PCE or something else to get us down there. Let's have a look at some stats then towards July. We mentioned the stat of 90%. Well, if we look at the last 21 overall years of first trading day in July, it's actually up 90% of the time with a 19-2 ratio. And the last 13 times, guess what? Boom, straight up. So yeah, it is the best day of the year. It's actually historically the best day of the year, and it ends up leading into the best 2 weeks that predominantly does occur. Now, will it be the same way this year? Well, we never know that, but this is the stat, and of course, it tends to be the first kind of half of the month good, then it goes a little bit weak, and sometimes you see topping of markets in July or August or September. They're usually the 3 months that give you those tops, and then they get a little bit shaky. Sometimes we get a 10% correction max kind of area, and then hopefully we continue to go forward. Now, why could we be going forward? Well, as you might know, we do track a couple of stats here a little bit differently on the channel, and one of those is US rail traffic, and the other one is actually got to do with flights, and we brought that up in our previous video, but I want to put them both together for new viewers right now. And one of those is year to date, we're actually up overall on total traffic on rail, and we're also moving towards some interesting points here when it comes to the overall number of flights tracked, an all-time high, a new record, and it looks like the American consumer, which we can track using a code later on we talk about, is still spending big time in the economy leading into this election. Now, we've discussed how central banks around the world probably do not have restrictive enough fiscal policy, and this makes sense because, of course, we know that overall the Fed kind of says one thing and does something else. And that's leading into the discussion of whether we're going into a re-inflation or stagflationary period still, even though some of the data points have started to look good. Remember, Australia and Canada have both shown re-inflation is starting to occur. Let's talk about hedge funds, because this is one of the big things here. Hedge funds are all piling into short bets on oil. Yet what has oil been doing? It's been going up. And as you'll notice, when we look at a chart, and we did this yesterday, usually they're pretty wrong when they do it. In terms of vol, we know where the volatility tends to happen. You can see here when we tend to spike up, and vol structure is actually going earlier this year. So you'll notice the spike is coming through in July. Now, we just had the first debate, and I can kind of see why it might end up being quite volatile, because obviously things are all getting a bit wild. But overall, this is what the market's thinking. It's thinking maybe we're going to see a sharp volatility spike leading into July. And that's why things could get different this year from where they've been predominantly previously, which has really been ramping more at the back end. You'll notice actually it got earlier though when we came to 2020. We actually were getting really volatile in that August into September period. Could that be bringing forward? Well, price action will ultimately show it to us, but I would like to be aware of that. And of course, we will update you on the channel if those things start to occur. This is historically what's happened since 1928, which has been more of a curve. Now, we do know that overall the 25-day put-call ratio has been at those low points. We've seen this a few times, and it's led into little declines on the markets. We'll keep updating you on that, whether we think it's actually worrying. And we do also know that if we put 2024 in perspective, the average year will usually get a 10% pullback. We've seen a 5.5, which is normal. And what I would say to this stat is that we usually get 2 pullbacks a year of note. Now, we've had 1, 5.5, may not seem like much, but that's pretty normal. And maybe we'll get one that's between like an 8 and maybe 10% later on this year. So this is something that, of course, we are on the lookout for. Just in case it happens, it could be an opportunity in this bull run. Now, why are we saying it's a bull run? Well, it has to do a little bit with manipulation, and that manipulation over the last decade has come from buybacks. If you look back about 2 to 3 weeks ago, we did a really good rundown on why buybacks have been actually forcing this market higher and how that's become the new favorite thing to push these markets through. But it also has to do with these secular overall cycles, and you'll notice that we're somewhere in this point here right now. Now, if we run similarly to probably the most 2 correlated markets, and notice that one of them actually is the dot-com boom, and the other one is also a very heavily concentrated market. with 1929 being just wild when you see how far away it went from the mean. And these kind of periods point towards, 25, 26, maybe even 27 being a concerning period. And what you'll be looking for there is the signs of uninversion of the yield curve. You'll be looking for the Fed to panic, all of those types of things. When they do that, you need to be absolutely running for the hill. And we've talked about this before. So let's discuss these activities. Now, we've already talked about the Qs having a large trade. And of course, in after hours today, we're a little bit higher than this point, basically sitting around there. But if we actually look through this a little bit more, you'll notice there was another big print. And this big print came in right near the end of the session ahead of the debate itself, a dark pool activity print too. So we get a dark pool print, we've got a large print sitting around it, and of course we've got these huge amounts of trades going through some of the stocks that were moving AI. Now, I like three main stocks. I've talked about it, three pillars: Google, Microsoft, NVIDIA. And I like those very much. Of course, Amazon has been lagged. Google was being lagged until recently and it's been moving absolutely ballistic. But Microsoft already kind of moved up a lot, similar to NVIDIA. Now it looks like it's dull and it's got a lot of transactions on it. Now you might think that's someone that's buying into Microsoft. I probably think that means that this stock is going to do this and maybe even decline a little bit, because you can see that the prints on this, they're no joke. They've either marked near highs and then marked near lows. And I think a lot of people kind of, forget about the way that this works. They don't look at it the next day and say, oh, big trade, I'm going to go and trade it the next day. They do it over time. They are position-based traders. They basically build giant billion-dollar positions and then sell them down. So that's why it's important to note these, but you really need to see price action come along with it. If you saw that and then you got price action of a breakdown, it was a Wyckoff style distribution, of course, that's going to be a more powerful sell technique. And that's why it's great to put these things together. Let's also discuss another one we brought up in the show. I thought we'd track this for now, and that was uranium. We saw uranium getting a couple of nice little clusters down the bottom, and that led into a little bit of recovery over the last session. So let's talk flows across the world. And right now we're seeing a little bit of an uptick in sectors that are different. Semiconductors are down. Well, that's pretty much what we expect. And we're seeing an uptick in things such as clean energy, solar, gold, finding a buyer, which is interesting. Regional banks, that's a good thing for the markets across the board. Our consumer discretionary concept at the moment. And of course, energy as well, which I'm starting to like a lot on the charts, and I'll go through that soon. Let's also break down what's happened over the last 5 days. Communications, discretionary, biotech. Not the normal subjects are out there, but they're also not defensive markets. They're not the staples, they're not the utilities, they're not the ones that are actually doing well. So let's break down what happened on the markets. And of course, did we get a close above 54.90? Well, first up, we didn't, but I thought that we would just quickly look here at the weeklies, because look at this, net delta, negative 1.224 billion, and currently trading at a pretty negative point. Now, that's probably telling you there are quite a few sellers here. And we're also getting signs of exhaustion of this recent bull run. Now, that just to me says I'd be cautious here. Of course, we're still bullish on months into year, but we're still looking from a day trade perspective. I'd say, well, I don't really 100% trust around this price. And I think we're looking for those signs. So let's just get rid of that chart for a moment. Is it unusual to see them at around these zones? No, but when we have those kind of larger prints that are all negative, and even if I move over here to the daily, I'll just quickly pop it on so you guys can see it. And you'll notice that there's a lot of negativity that's coming up in those charts if it ever does load. There we go. And there basically is like mostly negative the last couple of days in overall delta, with a lot of it coming in on the highs. Now, let's have a look at the closes themselves. It came up to 54.90, the high of the Monday trade. We've talked a lot about this candle, and basically it rejected it. It found that that was important. Now, this is not therefore a close above that zone just yet. Does it look bullish? Kind of. I'd say it looks like nothing really at this point, but it is something that we're watching closely. And this is all ahead of the core PCE, which is the Fed's #1 kind of read for inflation. Will we see a reinflation reading there? Well, that's going to be interesting. Now, when we look over the futures, I've updated this a little bit. This is call resistance Wednesday, but of course it's been the same call resistance. So call resistance still at 5,500. We know that's a huge positive gamma flip zone, which we'll look at in a moment. And it comes into here right after the debate. So basically we're sitting at this point. Are we sitting in there on the real market? Well, no, we're sitting there on futures. You could certainly argue that's accumulation. Obviously, the overall trend daily, weekly is up, and the bears really won't get control of this market until it gets underneath this 54.40, 54.50 zone. So this is really the last ditch effort for the bears, and they kind of need to push it down before the market actually opens to get it more in line with that high, that 54.90. This is going to be a very, very interesting Friday close. Let's move over to the options market, and you will see straight away what I'm talking about from 5,500. Look at that. You push through huge amounts of positive gamma. We all know how that works. If they do start squeezing, that means dealers will be offside. They've got to hedge it off. 54.75 is now where the puts are for the Friday. And if we move through to the first day of July, you'll notice here that we get a 54.60 on the put side, and the actual calls start to really stretch out to 55.65. Strange area there. But certainly if the markets are able to close the week above 5,500, I could see that causing July to play into that 90% game that it's done before. Let's move over to CTAs. They were up, now they're down. So again, neutralized. Nasdaq also neutralized. Copper still weak overall with the market, watching for that to change. And gold CTA is dropping it like a rock, though I do think still that gold is starting to look better and better. Not so much on the chart, but overall the thesis, the concepts that we've discussed, we'll do a special on that moving forward for sure. Now, what about Brent? Well, this was a nice uptick. Overall CTAs went boom, straight up. Look at that. Huge amounts of CTA participation. That's a momentum style increase. And of course, that's leading in now because it's 1 day delayed to the markets trying to break out. And it's playing into what we've been discussing about oil. You know, a lot of people are short it, but maybe they're wrong. Tesla, let's move over here. 200, huge breakout this week. Above 200, we'll start to squeeze those overall options hedging. And then, of course, next week, we've got 205 and then 200 for July is the level. So it's a lot at stake here for Tesla. 200 is just a massive zone on that stock. And if it can break and close above, maybe it's going to move quite a lot higher, and we'll go through that soon. NVDA, on the other hand, it's held up exactly as we expected and trapped between two zones, 125 on the top and 120 on the low. I'd kind of like to see it just maybe float down to 120, test that again, and then if it does end up holding around that point, possibly 115 could even happen next week, especially if NVIDIA continues to get rotated out of for now. Let's move over to the major markets. And as we mentioned in the last video, these are the points where we saw hedge funds so heavily short. You can see the results for yourself. They tend to be wrong, and already they're being wrong. They're kind of getting squeezed out. And that's forcing oil to look towards that 84, 84.50 a barrel. And of course, at this point, ahead of the core PCE, so we'll see how it ends up trading, it looks like more of the same as here, which is accumulation, breakout, accumulation, breakout, question mark. That's what we're looking at. Of course, this would be one of the main targets. Have a look at Brent as well. You'll notice both are doing a very similar thing. Now that's leading into energy stocks putting pressure on the upside, and you can see a bit of consolidation here. So if oil breaks, we get a weekly close of energy stocks getting out of this downward channel. Again, that could start, a real thing with oil. And I think a few people are starting to spot this now, though not as many people discussing it yet. And that's the thing you want to be doing in markets. You generally want to be a little bit earlier than most people. You want to understand that price action shows you that. And hopefully you guys have been following along. And if you do find that helpful, let me know in the comments down below and we'll keep discussing it. Overall, here are the options markets and, of course, the bonds, and they're not showing a freak out at this point. We've got Semiconductors versus SPY, arguably the most important chart. And guess what? It's still consolidating, but it's still overall weak. And that's showing that flow coming out. Now, if you want to know where Semiconductors could be going towards, there's a real distinct chance that we might get mean reversion again. Why? Well, we've had it about 10 times. So mean reversion, which is the 20 weekly moving average, that would be a perfect point to see semis switch again to the upside, and we'll have to find out whether that happens. American consumer versus staples doing very nicely. That's what we expect. Nike actually had a terrible result, but overall, a lot of consumer discretionary stocks improving, and that's just showing that people are spending, whether it's on debt, whether it's on something else, who knows, but people are spending, and ultimately the market just likes what it sees here and now. And yeah, of course, banks are also earning record profits. US 2-year continues to pressure on the downside. This will tell us a little bit about whether we're actually going to get cuts on the horizon. If we bounce, probably not going to get cuts. If we go underneath, people are going to be expecting cuts more. It's a pivotal point, and it's been sitting there since our last reads. Copper, nowhere land yet. No 425, no break of the upside. We'll keep updating you guys on that because that'll be an important metals trade. Let's move over to the US dollar. US dollar still looking strong, although it's showing signs of exhaustion. We'll have to find out how it trades into the core PCE, but at the stage, 106 still seems to be the target. And gold has absolutely no idea what it wants to do. It's up, down, all around. Weekly looks terrible. Daily looks, I don't know, pretty poor. It's consolidatory. It looks boring. It's coming back to the most traded level. We know that we're going to get a nice break on gold soon. On the downside, it's going to be, of course, I think kind of brutal and move down to 2160 to 2180 kind of low zone. On the upside, things could get seriously fun. So we'll be watching gold, and gold stocks, meanwhile, which are underpriced to gold spot, by the way, are still holding really, really nicely. And that's been our favored trade this year. Gold stocks doing some good percentages. Let's move over now to some of the single stocks. We'll start off with Tesla. 197, not bad. Right at that resistance we're talking about. 200, of course, one of the key zones. If we're able to clear 200 through the session and then it keeps going up, that's going to create a lot of, I think, offside hedging that needs to be done. And I think anyone knows about the kind of double looking inverse head and shoulders, whether you use this and this as the right or this as the left, head right. It does point towards some seriously big movements possible here on Tesla if it really starts to kick in. So the first target, what we've been talking about, has been working. This is certainly a profit zone for some people. However, if it keeps going, that'd be pretty wild. NVIDIA on the daily, long leg doji, doesn't know what it wants to do. At this stage, you'd have to think probably consolidatory. And that's the same thing that we've seen on quite a few of these stocks to do with the semiconductor market. Again, semis, we expect maybe the weekly 20 moving average. All right, let's move over to that one that we saw a cluster trade on, which was uranium. It did end up having a pretty good session, up 1.65%. We really need it to break through, though, back above this trend line. So I've said bullish above 30.26. We'll see. This is actually an island reversal now, just on the gap down, gap up kind of thing. And it does start to have some momentum behind it. So it shows you the power of using a mixture of techniques. Also, HSI takes the low, random big buyer comes in. Interesting. We'll watch this space. Above here, again, could be looking quite bullish. And above here, as we've always stated, that's where the swing traders get in. And we're still pretty bullish on the AI stocks. In particular, of course, the stock that we want to be watching the most of is Tencent. And Tencent continues to kind of hover around this zone. So it's still possibly accumulating big time into a break. And I'd like to see this stock lead HSI out. Move over to the big US markets. Dow consolidating around where you'd expect it to do so. Like to see that find some buyers. And the Nasdaq on at least the futures market breaking above this important supply. So it's basically saying I'm bullish. Now, of course, it is the futures market. It's not quite the real market yet in terms of the open. So this will be an interesting one. I'm going to wait for core PCE and the weekly close. But I think there's a lot at stake here for the bulls and the bears this week. So yeah, we'll watch. But Nasdaq's been improving a lot from the breakouts that we've been seeing on things like Amazon. So if you load up Amazon, I mean, you can see here the consolidation, the breach a few days ago. We've been talking about it a little bit in our community. The weekly 20 moving average also holding it up, and how significant this breakout is. You can see here, you've got this huge breakout. It actually happened at the end of last week, and it's moving forward. So there's not really any sign of this slowing down anytime soon. And that's happening on a lot of stocks in the big tech. It's not happening on Microsoft. It's happening on things like Google, which has been running really nicely, similar kind of setup, and even Meta, which has been consolidating. Because you've got to remember, these have been consolidating since Feb. So these are playing catch up, and guess what led it all? NVIDIA and the semis. So it does look like rotation going through the street. US 2K, still too early to really state whether this is fully in accumulation or breakout. Remember, this huge rejection here, you get above 2100, that's going to get a lot more interesting for the Russell. But the Russell coming off really that deeper level, we'll see how it plays out. Now let's move over to Bitcoin. Yeah, it's just sitting there. So Bitcoin hasn't shown extreme signs of anything, I would say. It bounced off the first major support, absolutely went blitz up, and then now it's just consolidating. Now, if it holds here for a while and then breaches out above, that could be a good sign that it's accumulated a position here and it's ready to move back up. So for now, you would have to say, yes, the overall trend is down, but if the breakout happens after this keeps sitting for a bit, then your next target would be about 64.2. So some interesting zones. Core PCEs, what everyone's looking at, 8:30 a.m. New York time. And that's going to be the one that I would say will move the markets a bit. And make sure as well to stick around and subscribe to the channel because we'll have a great weekend video for you guys. So make sure to sign up and we'll see you then. Thanks, guys. Bye for now.